How's it going, guys? So this is gonna be a video on how to use a stop loss. Guys, this is one of the most important videos you're gonna need because stop losses are important for three good reasons. One, it helps you protect your account. Two, it helps you figure out your proper lot size, as you've seen in our last video, in the risk management video. And three, it helps you manage your trade. So we're gonna go through all three of these and how all three can help. So let's kind of start off with number one, protecting your account. Most people mess up their accounts and blow 100% of their money because they don't follow, from the last video when we talked about proper risk management, they don't follow proper risk management. So what that happens is they either don't use a stop loss, or they use 100 pip stop loss and don't calculate the proper percentage. They might have a 100 pip stop loss and be risking 30% of their account, but they might have a 30 pip stop loss and be risking 40% of their account. So understanding your stop losses is very important. Now, another thing is that it gives you that you can sleep at night knowing that the most you're going to lose is 1, 2, or 3% when you go to sleep. No one wants to sit there and watch a trade. Number two is figuring out your lot size. So what a lot of people mess up is you don't have a stop loss, or you don't know what your stop loss is going to be. You don't know what your lot size is going to be. So you just put in anything. I mean, you're just risking anything. And that's another reason you can easily just blow your account, or you can just have inconsistent wins and losses. So understanding your lot size helps you understand your positioning, understand your lot size, and so forth. And number three, it helps you manage your trade. So as you're in a winning trade, you can manage your trade. So we're going to talk about all three. The first thing we're going to talk about is how you figure out your stop loss. So there's a couple of ways you can do it. Well, there's a couple of ways I do it personally. So let's assume that we're in a buy. We're going to use a buy and a sell for an example. And let's say I looked at this buy, and what I look for, guys, is if I want a good stop loss where I don't have to worry about too much, I look at the last low for a buy, a last good low in the same time frame. If I want a reasonable one, and if I want a tight one, I'm going to tell you how to get that also. So let's bring our stop loss up, and let's say that our position is right here, right? So I would do a reasonable. I usually do like 4 or 5 pips, or like 2 to 5 pips below the low. So I wouldn't put the stop loss here. This is the low. I ignore this because this is a long wick. This is probably because of the news. We're going to look at the actual area where it reacted the most. So as you're seeing, this area is the last area where it reacted a lot. So what we'll do, we'll just put a stop loss a couple of pips below that. So we'll put it about right there, right? So now another thing the stop loss helps us do is figure out our lot size. So we have a 17 pip stop loss. If I want a 1-to-1 at least, then that would be my take profit. But let's assume that we're doing 1-to-2 at least. Now, if we had taken this trade, it would have came up, we could have won. Let's say though that we want to hold this trade. Let's say we're doing big long trades, like swing trades. So we're holding it all the way up here, right? Let's say we're holding it this far up, and so another cool thing you do is stop loss. Let's say this is our stop loss right here. And let's say that this is our entry. I'll change the color so we can see it. And I'll make this bigger actually. So this is our stop loss. And this is our entry. Totally did that backwards, right? So we're in our trade. We'll move this to the side so we can see. We're in a trade, and the market goes up. We're gonna go based off of this. Goes up, comes down, goes up, comes down, goes up. So we're about right here now, right? By the time we create a new, as you've seen in the videos, higher highs and higher lows. So we create a new high, a low, a new high, a low, a new high. So when it got to this level, I would be looking to put my stop loss at least where my original trade was, so at a break even. So worst case scenario, it comes down, it takes me at a break even. So I would just say, look, wherever you enter the trade, this is where I would put my new stop loss at. So you can go on your MT4, modify the trade. I told you how to do it earlier in the videos too. and change your stop loss to your break even. Now, let's say it keeps going up, right? And now it's going up, going down, going up, going down, going up, going down, and went up some more. What I would do is around 1 to 1, which is probably where it's at right now. Let's see. If I had to guess, if this is where we got in at, and this was our stop loss originally, our 1 to 1 would be, oh, this is 1 to 2. So look, we're at our 1 to 1 when we went to break even. So now we are at 1 to about 1 to 3, right? It's about 3. Once we get to about 3, or around that area, right, I would move my stop loss to a 1 to 1 or a 1 to 2. So you can do that. You just want to put it below. I would put like around the 1 to 1. But let's say that you want to put at 1 to 2 just in case. So now we're guaranteed profit, right? We're up here somewhere. Let's say our trade is up here somewhere, and our stop loss is right here somewhere. So worst case scenario, since our original entry was right here, is we are at least 25 pips in profit. So worst case scenario is that the trade comes down and takes us out 25 pips. Best case scenario, it hits our take profit. So as you can see, it hit our take profit, for example. But let's say our take profit was all the way up here, right? Let's say that it didn't hit our take profit. And it came all the way up here, and it came down and hit, and it came down, and I hit our 25 pip take profit. Now, if it did that, what I would have did, honestly, personally, is that I would look at where it was stagnant. So as you see, this is what I would have did personally. I said, okay, cool. I see where it created this information, and I see where it got stagnant around this area. So I move my stop loss a little bit below that. So worst case scenario, it might come back to this area, either take me out or it's stagnant in this area again. So what happened was this. It came up, got stagnant in this area over here, and continued to push up. And then you probably would have took profit right here. But as you can see, all we do is move our stop loss in areas where it becomes stagnant. Because usually if it was stagnant here before, it'd be stagnant here again. So that's how I like to treat my stop losses. Definitely if you're going for a super far TP. But that was 2 lessons. I'll do another lesson, right? Let's go to a sell, for example, right? As you can see, let's say that we took a trade right here at the top. And what we will look for, let's say I took our trade right here, just for example purposes. We'll say, look, remember we go yellow to red? So let's do our yellow to red routine. Oops. That was another what chart we was looking at. I think it was Euro USD. Well, whatever, we can just pick another one, doesn't matter. It all works the same, right? So look, we're gonna use the yellow to red, right? So let's say we get into here at this area. And so where would our stop loss be? Well, our last high was right here. So we can put our stop loss above here. We can make it red. That's our stop loss. And our take profit, let's say we're gonna hold on to the trade very far down here. So the trade's going, it comes up, it comes down, comes up right here, comes down. Where's my stop loss going? Where the area is stagnant. It comes back up, takes me out. Cool. I was still 20 pips in profit because of my stop loss. So you make an initial stop loss above the high on the sell, and then your buy you do below the low. Now let's talk about really, really tight stop losses where you can get really tight in there, right? So let's look at that. We took the trade here. We're going to look at this trade, for example. Let's reset it to around this area. Now this is a more riskier type of stop loss, but it's up to you, right? So I'll look at we're looking at the trade right here, and they call the sell. So we enter our trade around right here. So where's our stop loss gonna go? I like to sometimes go down to like the 1 minute, or 3 minute, or 5 minute. Let's just go to the 1 minute first. And I look for a price stagnant at the 1 minute and put it below that. Because remember, there's way more data on the 1 minute. So typically, if I was on the 15 minute, my stop loss would have been up here somewhere, which would have been it's not bad. It's a 20 pip stop loss, which isn't bad. Would have put it above that, obviously. But instead, we're right here, right? And we're looking at price. And we'll say, you know what? If we were waiting for this to break out anyway, I could look at the old price. Let's say if we looked at it, we took a trade around right here, right? So I said, okay, we're gonna let's look at where we actually took the trade. So instead, this is where the trade is. Let's say we're looking at entry right here somewhere. I would have put stop loss right here instead, above these areas. So now I could have got a tighter stop loss, and now my stop loss is 11 because I did off the 1 minute. And let's say I took the trade around here and I waited, and we're gonna wait for the entry. We're gonna wait for it to get back down here, and now we took our entry right here. Because if you're gonna do the 1 minute as a stop loss, you need to wait to enter till it gets to an area away from your stop loss area, right? So we would have entered around here. We could have did now we could do a better lot size. We hit play, and look, now we had a type stop loss. Now it has to get all the way back up here. If we go to 15 minutes, this is what it's looking like. But you wouldn't have seen all that data if you only did it based off the 15 minute. So I like to go to the 1 minute, 3 minute to look for areas of resistance. And I won't even enter the trade till I see a good entry on the 1 minute, and use the stop loss reactions on the 1 minute to figure out what my stop loss is going to be. So yes, you can use a lower time frame to figure out your stop loss, which will give you a tighter stop loss. You can use the 15 minute to give you a regular stop loss, or you can go up on the time frame, right? So let's look at up on the time frame. This is what some people do. They'll look at the hour, and that's okay. Well, on the hour, it did all this. So they'll bring their stop loss all the way up here. And let's say their entry was like around here. So that's a 45 pip stop loss. But you have more wiggle room. So it's kind of up to you. If you afraid that you're gonna hit, and this was a couple of hours, so you've been hit your take profit by now. But I like to use either the current time frame, which is the 15 minute, or the 1 minute or 3 minute. But if you just really afraid, or you really just new and you're trying to just get used to even winning, you can go to the 1 hour to to look at the last high like we did here, and it'd be much harder to hit. And then you can go after you put your stop loss to go back to the 15 minute, because you see it went all the way down here. We got all this profit before we came back up here. So we still got a lot of pips. Now the disadvantages of having a large stop loss is you have to lower your lot size. So let's look at the difference in lot sizes, right, between our three time frames. Where was I? I think it was right here somewhere, or we'll just say right here somewhere, just for example purposes, right? Let's say our entry is here, and we have one stop loss there. We have one stop loss here, and we have one stop loss here. We're gonna call this the 1 minute stop loss. We're gonna call this the 15 minute stop loss. We're gonna call this the 1 hour stop loss. Now, if y'all looked at my risk management video, it doesn't matter what your stop loss is. The only thing your stop loss does is affect what you can do per on your lot size. So, for example, when we enter this trade here and we had 10 pip stop loss, and that's if we had $1,000 account, risking 3%. That means that no matter what our stop loss is, we need to only lose $30, right? So if we had 10 pip stop loss, we could, on this lot size, we could have did $3 per pip. Because if we lost 10 pips, that's $30 we lost. On this one, this was we'll put it about we'll put the stop loss at 30 pips, about right here. Give us some room, right? Give a little wiggle room. Now we have to do $1 a pip, because Why? Because we have a wired stop loss. We're still only going to lose $30. So no matter what your stop loss is you're still going to lose the same amount of money if you're trading like I tell you to trade. And I'll tell you why you shouldn't trade another way, right? So let's say this is 50 pips, right? So if it's 50 pips, for you to lose $30, you will have to do, I believe, like 60 cents a pip, right? So we'll just say 60 cents a pip. So if all three of these have the same stop loss, but they all have, like, let's say a take profit down here somewhere, just for example purposes, then this stop loss will make you more money here because you got $3 a pip. So this was like 100 pips, we made $300. Since this is $1 pip, we made $100. And since it was like 60 cents a pip, we'll just say 50 cents a pip to keep it simple, it was $150. No, not $150. So depending on your stop loss, this person who did the hour made $50. The person who did the current time frame, 15 minutes, made 100. And the person that did the sniper entry that was patient and got really good at their stop losses made 300. So we went over how to find your stop losses. We went over how to move your stop losses if you're on a hold trade. And that's pretty much it, guys. So I say practice. I say if you're new, you can practice here and just start bringing your skill set better and better and better until you get used to the 1 minute and the 15 minute. I would try to stay away from the hour, but because I feel like unless you and only use the 1 hour when you don't see any other options. So all these can be options, but this would be your first option. This would be your second option. This would be your third option.